Hello and welcome to Jazz After Dark, everybody. How you doing out there? Did you have a good long weekend? Get your celebration on? A little Labor Day action? It's time to get back to work, people. You know, summer times, everybody's spending money out there. I see it. I'm watching all the data points. I see the money you guys are spending at hotels and on cruises. My goodness, you guys, crazy. Time to get back and getting your dough straight. And unfortunately, this year, we're going to get back to getting our dough straight and the presidential cycle, right? And so this is going to come up. There's going to be a lot of this going on. I had to make my own charts today for this, so pardon the messiness here. And normally Cody helps me out with that. But we're going to talk about presidential elections, presidential election years, performance based on power, who's in power. And we'll let you make your own decisions here. I definitely want to start off by saying that I don't know if you can use this with any real meaning. If you think about it, like a Democrat now versus a Democrat back in the 30s, 20s, whatever. Remember, we can only go back to the beginning of the S&P, which was September 2021 or 1921. So, this window that we're using, there's been a lot of changes. So a Democrat now is probably not the same as a Democrat then. A Republican now is not the same as a Republican then. Well, Trump, right? Look at Trump versus the Bushes, right? Two totally different styles. So I'm not sure what you can do here with this, but nonetheless, we're going to cover 23 elections because there has been officially 23 elections since the start of the S&P's data that we can use. And I'm going to go through this one by one. But the first thing that I thought was, I would like to know the performance during non-presidential years and performance during presidential years. Naturally, there's only one presidential year where there's an election, but there are, could be, as little as 3 that are in between. So I kind of thought, do we get spooked? And do we see presidential election years, the market's all over the place? Or is it just kind of average, right? How does that play out? So let's take a look. Here is the first bit of data. We have presidential election years. The S&P averages 11.57%. Non-presidential years, a little bit better. So it's not a meaningful amount really, but it does do a bit better there. And more importantly, non-presidential election years tend to outpace the S&P's long-term average. So during presidential election years, slight underperformance. Maybe we see that happen again. But what can we attribute to that? Remember, actually, I'll give you 2 things. Number one, the president themselves does not really control the economy. The stock market, of course, performs based on the strength or weakness of the economy, but the president themselves has really little impact historically over the stock or the economy, which then in turn, hopefully, is the stock market. So as we do this, we're going to get a little deeper because, a president can't cause the economy to be better. They can have, certain policies and things that do spur certain areas of the economy. But overall, you think about it, we vote based on one of the reasons that we vote for a particular candidate is how we believe they're either doing with the economy, if they're the incumbent, or how they will do with the economy, when in reality, there's not a real good correlation there. You can disagree if you'd like, but there's just not. We will go somewhere with that, though. Okay, next thing we're going to look at is if there's a change in power, because the second thing I wanted to tell you was that the stock market likes chaos politically. So not stock-wise, we don't like when there's bankruptcies and bank failures and all that stuff. But the stock market likes chaos politically because why? Maybe nothing gets done, right? Whereas when everybody agrees, for example, if there's a tax, let's say, and both sides agree on this tax, that's going to affect the stocks that have to do with those in particular policies. So kind of interesting. So when there's a new party in power, the S&P dramatically underperforms itself. when the existing party, either the incumbent president does a second term or a new president takes over but is with the same party, it's not so common, then we have a 16% gain. We dramatically outperform the S&P's average return. So to put it in perspective, just in case I spoke out of line there, if Joe Biden stayed the president, this would be his second term, that would be in this column here, we would expect outperformance, or historically we've had outperformance. If Joe Biden says, I'm out, I don't know if he said this or not, but if he says, I don't want to run, I'm going to go retire and live my life, and another Democrat comes in and wins the presidency, that would be the same thing. So that has happened in the past, so I wanted to put that together. However, when we change parties, for example, from Trump to Biden, from Obama to Trump, from Clinton to Bush, et cetera, all that, Bush to Clinton, right? So that's where we see underperformance in the market. Again, the stock market likes predictability in terms of nothing getting done. So I said chaos a second ago, which means it's predictable. They're probably not going to get anything done. So that's a funny way to say that. Okay. Now, even though I just mentioned that a particular president does not have solely that large of an impact on an economy, which would then maybe translate to the stock market, we're still going to look at it because this one comes up all the time. This is the headline data that you tend to see when you watch certain channels that want these people to win and certain channels that want these people to win. It's like it or not, we're going to go through that again. Republicans as a president underperform Democrats as presidents. Now, to be fair, if you were to break out this by individual Democratic president, it does not mean that all of them did well. There are major outliers in the Democrat side. And to be fair on this side, most Republican presidents have presided over big downturns in the economy. The Great Depression, the Great Financial Crisis, things like that. I don't know if they're correlated. I'm just saying when I look at it, I go, well, no wonder these guys suck data-wise. They had some tough times. There are some good in there, of course, but over here, there are a lot of outliers that pull the stats in the right direction. But since you're going to see this one, I'll just share it with you. Democrats kick the butts of Republicans, and Democrats kick the butts of the long-term S&P average. So if that were the only data you had to go by and you believed in it, it is pretty obvious which direction that skews. What I find more interesting is, and we've seen this, right? We saw this with Trump most recently, if you want to look back. When there's a unified Congress, meaning President, Senate, House, all Republican, all Democrat, whatever it may be over time. When there's unification, that is more interesting to me because, okay, you should be able to get things done. There's no excuse if you're Republican and you control everything and you want to do whatever with the economy or personal family beliefs, whatever it is, it should be able to get done. Democrats, same thing. So if we look at, well, first of all, what I found this really interesting here. There were 48 total years where we have had unified congressional power, right? One party controlled everything. Of the 48 years, you have 36 of them were unified Democratic controlled Congress and the White House, of course. And so the vast majority of the time, the data, so we have skewed data, right? Because we have 13 years of unified Republican Congress, and then we have 36 with Democrats. So already, if you see this data, well, we have a lot more data over here. We have very little data over here. Not trying to make a case for anything, but let's take a look, right? So here's how I broke this down. Unified Republic, I put it here, there we go. Unified Republicans, 13 total years, 14.52%. That underperforms the stock market, but it's 14.52%. Unified Democrat, 36 years. They do just a little bit worse, but still a respectable 14.01%. Look at this. divided Congress with Republican as the president. There were 34 total years where this happened. Dramatic underperformance. You can look at that two ways. Of course, you can, spin the numbers however you want, but you could say that the Democrats have more power when they're not in presidency, meaning they can stop a Republican from doing certain things that ultimately maybe hurts the economy. You could look at it the other way, right? So just whatever political side you land on, I've got you fired up tonight, right? And then moving on here, divided government with the Democrat as president, 15.94%. This is your best case scenario if you are betting based on politics alone, which, let me throw out one more time, that there is no way that I would make decisions. We manage over $350 million here at Jazz Wealth. I would never make a decision based on this. Number one, it's because I just don't get into it. I don't follow every political thing that's out there. I do follow when they hone in on a sector. I want to know what's going to go on. And number two, there's just not enough data to make a big, clear sampling of what maybe you could do. Where's the opportunity, or where's the weakness or risk? So I don't look at that. But nonetheless, if you're curious, that is how everything breaks down. If you want to look at it one more time, we have unified Republicans, unified Democrats, divided with Republican as president, divided with Democrat as president. The main headline chart, which is just by president and their party, looking back here, whether a new party takes over or the existing party stays in power, the S&P's performance during that time period. And then the first thing we talked about here, presidential election years versus non-presidential election years, and the impact of the market's performance wrapped around that. Interesting? I don't know. I thought it was fun. This all stemmed from me asking that first question, performance during non-presidential years and then presidential election years. And then from there, I was like, well, let's look up this too, or let's go a little bit further. Let's separate out the data. And I just went nuts. And now it's late at night and I'm finally getting around to recording this. If you found this helpful, you may find Jazz Wealth helpful. We love this stuff. This is what we do. We are pretty much the only advisor you're going to find that manages our own portfolios. And if you look back to the Jazz After Dark the other day, I shared our performance so you could see that as well. We love long-term retirement planning and basically just helping you get your dough straight, whatever that means for you. No cookie cutter process here. Whatever we can do for you, we will be happy to help. Check us out, jazzwealth.com, and enjoy the rest of your evening. Adios.